This is Frank Fortunato with CATEX TV from Princeton, New Jersey on Thursday, September 22nd, 2011. Bad news coming up in the economy. Yesterday, the Federal Reserve said that they see growth economically in the United States essentially stalling out. All futures for the stock market and on opening indicate that it's going to be a bad day. U.S. Jobs actually increased for the last week. Relatively good news, but I don't think it's going to be enough to thwart the tidal wave of bad news. Meanwhile, here's some really alarming news. Lloyd's of London is pulling money out of certain banks on the periphery of Europe's economy. They're concerned that European governments may be unable to support those lenders. Luke Savage, finance director of Lloyd's, said there are a lot of banks who, because of uncertainty in Europe, our market has stopped placing deposits in. If you're worried that the government might be at risk, then you're certainly worried that the banks could be taken down with them. There are rumors floating around that Siemens, Europe's biggest engineering company, withdrew short-term deposits from Societe Generale back in July. Lloyd's holds about $4 billion of its central assets in cash. More news on the Omega front. Barbican has now confirmed that it has indeed submitted a merger proposal to Omega. Under the Barbican proposal, Omega would be the purchaser in an all-share deal, with Omega shareholders offered a partial cash alternative after the merger, sort of a reverse buyback. Barbican took a blast at Mark Byrne's Haverford, saying that Haverford has no notable insurance operations to drive efficiencies in the short run. And they said that if the Haverford bid was successful, the company and the shareholders of Omega would be without the customary protections afforded by the UK Takeover Code. Meanwhile, news that Mark Byrne would earn 200% of his annual £400,000 salary, which he would receive as the executive chairman of Omega if the deal does not go through. Byrne's investment in Omega is valued at £50 million, with each share costing him 83 pence. Apparently, Byrne said in the current deal, Canopius and Barbican are the rivals he has to watch out for, with the possibility of a full all-cash offer being made by them at the same price, hence the protection. In Dagestan, 3 massive blasts in the downtown area of the capital of Makachkala have ended up killing 3 policemen. In Baltimore this morning, 10 row homes burned, killing 3 people in the 600 block of South Pulaski Street. Jack Nicholson, the executive director of the Florida Hurricane Fund, said that the fund is in grave danger. The fund is currently providing about $18.5 billion of coverage this year. It has $7 billion more in cash. In the event of a hurricane, would have to go out and borrow $11 billion more, which in the marketplace today would be very difficult. Changes at Willis Aerospace. The broking group has named Mark Wilford as chairman of its global aerospace division. Wilford is currently director of risk at Rolls-Royce. He's going to replace the retiring chairman, Andre Clerc, on 1/1/12. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching.